Hey everyone, this is Justin Nichols, Chief Investment Strategist with JPN Investments LLC. This is your market update for December 26th through the 30th, 2011. This is our last issue for Volume 1 for the year. So we want to celebrate the closing of our first year of this market update. As you can see here in U.S. equities, the large, mid, and small caps are all lower for the week. If you look right there again, a trend that we noticed from last week is the small caps have been the worst performers, although that is a larger, more diversified index, what have you. Utilities was the superstar of the week at a mere 0.5% gain, and then consumer staples and healthcare following after. If you remember back a few months back, we ran an issue on the safest sector to play and how to trade it, and that was actually utilities. Utilities ended up being the highest performing sector of the year, so that was a good win for us. Three of the big economic reports that came out this week were consumer confidence came in pretty good. It beat economist and market expectations. Then the jobless claims for initial came in. It missed expectations by around 20 to 30,000, I believe. The continuing claims came in below, which is good, which is beating expectations. The pending home sales beat expectations by a considerable amount, almost 7 percentage points, which is huge. So we may be actually seeing a recovery in real estate going into 2012. Chart review here. This is of the S&P 500. As we talked about last week, we said to keep an eye on the Dow for a double top. Now we're looking at a potential double top in the S&P right here. Price action failed around just around the 1270 mark. Then it failed around the 1270 mark again right here. So also remember, this is still a symmetrical triangle pattern, and it was recently broken, but we're seeing weakness every time it rallies above this downtrend line here. Also, if you notice, the 200-day moving average is still in a decline, weak volume, so if we want to see this trend break to the upside, we really want to see more volume supporting that, getting under that for a couple days as confirmation. Things to watch for next week. Keep an eye on the 1300 level. That's the S&P 500. We wrote an issue back in, it was either late November, early December, where we said heavy selling pressure is expected at that price level from a trader standpoint. We're also looking for heavy institutional selling leading into early January. Remember, that's the January effect. It has actually been proven a profitable strategy to buy after that selling has occurred in January and take advantage of those weakened prices. We want to continue to stay cognizant of Eurozone factors because our markets right now are heavily tethered to any positive or negative news that comes out of that region of the globe. Again, we got our 2012 Business and Finance Summit. We're going to kick off 2012 with that. It's going to be January 21st. If you got an invitation to it, can't wait to see you. We're going to have a wonderful meal at an exclusive location. If you're not going to be able to join us, that's okay. We're going to release a proprietary summit research report. It's going to give you strategies, data, and analysis to be successful for 2012 in your investment endeavors. And that's not just with stocks or equities. That's we're going to have specialists from derivatives. We're going to have real estate strategy sessions. We're going to have local and global economic and business forums. It's going to be an awesome event, guys. We're really excited about it here. If you got any questions, you can refer to the About Us section of our website, jpninvestments.com. Feel free to give us a call anytime, 913-608-4038. Trade wisely and Happy New Year.